Hey, welcome back to another episode of E-commerce on Tap, brought to you by Sourcify and ISBA. I'm your host, Nathan Resnick, joined by my co-host, Aaron Alpeter. Aaron, how you doing today?
I'm doing pretty good, Nathan. How are you doing?
Not bad. I'm excited for this episode because Allbirds I'm a big sneakerhead, as you can tell from my background. And Allbirds is obviously a sneaker brand that is super innovative and has just kind of grown quite a bit. And we're going to tell the founding story and dive in here. But for those people that are listening for the first time that aren't familiar with e-commerce on tap, do you mind giving a quick overview of what we do?
Yeah, it's a lot of fun. We're grateful to have you on with us. We were just joking around how many people are listening. We saw the stats, so I guess we got to keep doing this. But each week we take a well-known, typically venture-backed company. We'll reverse engineer their supply chain, tell their founding story, and talk about their X potential.
Yeah, and so before we dive into Allbirds today, you want to kind of start, were there any interesting tidbits that caught your eye the past week?
Yeah, apparently Google knows that I'm interested in Swedish startups. And so Fjällräven, which is the backpack company, they have launched a resale marketplace. And so similar to what we talked about with IKEA a couple weeks ago. And this is a really interesting one because their ethos of their brand is really about reducing waste, promoting circularity. And so this is completely on brand with what they're going to do. And they've made attempts at this in the past, when it comes to doing repairs. I saw a statistic that in 2023, they did 8,531 repairs. So this is like something's wrong with my backpack. I send it in, they fix it, send it back to you. That's compared to 3,500 repairs in 2021. So they've been growing that part of their service. And the interesting thing about this is not that they're just offering a resale platform, but it's the way that they're doing it. And so I wanted to kind of dig in a little bit on what they're doing. They are using a platform called Archive, and it's effectively this kind of re-commerce marketplace in a box. And it's really interesting for consumers to create a listing. You basically connect your Shopify store. You would have all of your product descriptions. You'd have some hero images, things like that. And so you think about where the peer-to-peer marketplace has been, and it's Facebook Marketplace, and it's the grainy pictures on somebody's couch of the sneaker or the backpack. You're like, okay, well, that looks fine. Well, now they're looking to elevate this so much more and say, hey, you kind of all know what this is, but otherwise you wouldn't be looking for a resale. Here is some of the marketing stuff that we provided, and then we're going to allow you to do that. And so they're doing some interesting things there from an archive perspective, where they are allowing brands to inject inventory into this secondary marketplace, either from their own stocks, from their consumers, or they offer like a trade-in. And so there's just some really interesting things that are happening in that space. And, I kind of went down a very fun little rabbit hole with Fjällräven, just about re-commerce in general. It's an area that is just growing very, very robustly.
Yeah, it's pretty cool. I think it's often overlooked by DTC brands as well. And awesome to see they implemented this amazing marketplace.
Oh, I had one piece of advice that I got years ago, which I think made sense, is when so many times returns is something that surprises people. And the thought is that you should look at this from a design perspective and assume that every order you send out is coming back to you. And so if that were the case, how would you streamline your returns process? What would you do with all that inventory that came back? And so I've always used that as a principle when I'm thinking about designing a network flow, to say, okay, if it all came back, what are we going to do with it? And when only 10% comes back, that's awesome. I've only got 1/10 of the problem I thought I was going to have.
Yeah, it's a good thesis and kind of way to think about that. For me, I've been on a kind of creator-led commerce kick, and what caught my eye is Patrick Mahomes, the Super Bowl quarterback of the Kansas City Chiefs, has launched and I think become the lead investor in Throne Sport Coffee. So they announced an $8 million seed round, and I just think it's super interesting how these celebrities and athletes continue to kind of drive commerce. You have Tom Brady and TB12, and you've got Logan Paul and Prime, and just so many people that are kind of utilizing their audience to launch these, D2C or, commerce brands. And it's pretty cool to see. I mean, Throne Sport Coffee, I haven't had it yet. I'll have to, see where they're distributed and see if they have any in my area. But it's pretty neat to see just how, I think that's kind of the new arbitrage in some sense, is, utilizing a audience versus just being so reliant on, Facebook and TikTok ads and stuff.
Yeah, it's not bad for Taylor Swift's boyfriend's best friend.
Yeah, exactly. So I guess starting here, as we get to Halloween here pretty shortly, I mean, Aaron, if you were going to dress up as a VC for Halloween, what would your costume look like?
This is a fun one. I guess I would ask, am I a San Francisco VC or a New York VC? But I would imagine that the uniform would be something like a Patagonia vest, because they always seem to have those. One of those new AI pins that you would see, and probably some Allbirds shoes.
I think you're spot on. I mean, Allbirds kind of is so trendy for these, typical finance oriented people. And it's just super interesting to hear their stories. So I would assume most of our listeners have heard of Allbirds, but for those that haven't, it's, one of the kind of fastest growing, most funded D2C brands of our time. Today you're going to hear the stories of their innovation, their disruption, and really the hard lessons they learned along their journey. And, they're still publicly traded. It's pretty fascinating. At the end, we'll disclose their revenue numbers and all that information as well, and do a deep dive there. But before we get started in terms of Allbirds, I'm curious, like, what's the history of human and sheep? And I say sheep because for those that are not aware, Allbirds, really became popular for the wool that it used from sheep in New Zealand. So really just fascinating supply chain as well.
Yeah, we have, as a species, we've interacted with sheep for a very long time. Even before it was a thing on the Catan board or in a nativity set, sheep have been a big part of human history. And so the first kind of connection is going back to about 6,000 BC. And that's when archaeologists first found the first remnants of wool in Mesopotamia. And it was really something that stayed in the Middle East for a while until the Roman Empire, about 1000 BC. And that's where they were able to spread the production of and usage of wool all across Europe. And so you think about, Ireland and Scotland and those places are just full of sheep. Those were relatively new introductions when you look at a kind of a migration of a species. But really the modern wool conversation starts in the 19th century. And it really is tied to the Industrial Revolution. And there were lots of different types of machines that were being created that were going through the steps of helping to shear the sheep, help to clean the wool, help to orient it, spin the yarn, and actually build the fibers that was there. And so at its peak, Britain and the US were the leaders in kind of this mechanization of wool production. And this was right about the same time that the British Empire was at its height of power. And so, they kind of used this as their manufacturing base to help industrialize or colonize places like Australia and South Africa, New Zealand, as an example. And so that was really how wool was put on the map. Obviously, things shifted over to cotton and from a textile perspective pretty aggressively. But in the early 20th century, people started to think about wool as a more durable fabric than a cotton. And so you'd see this a lot in uniforms, or particularly World War I. A lot of those uniforms were just very rugged and held up well. They were warm. They were able to stay dry to some extent. And starting in the late 20th century, we started to see a decline in just the use of wool. And this was really more the advent of synthetic fibers and synthetic materials. And so as you have the plastics industry coming on board, you see things that used to be made out of wool are now made out of different types of plastic. And so, this is where your polyesters, your acrylics, your nylons come in. That all used to be wool. And so you think about some of the clothes that you wear that are nylon, like if you're working out, I couldn't imagine wearing a wool workout shirt. That could be kind of itchy. But, kind of fast forward and much like Allbirds, the history of wool is one where it was huge and massive and then has kind of cratered and come down to earth as other things have replaced it. But it's today considered very much a niche product. And there are some amazing properties about wool that lead to its durability, that lead to, this great sustainability story. And New Zealand in particular is known for producing some of the highest quality wool. And I think it's merino wool is what they call it, has some of the most exceptionally fine fibers that really are how you make premium products. And so there are very high-end sweater companies like Nadam. There's, of course, Allbirds. There's other very niche high-end fashion folks that are using these natural fibers and things like that. And so it's a fascinating piece about kind of the rise and fall of the wool industry and how it's found a new niche in really being ultra sustainable and really high end.
Yeah, it's pretty fascinating to see the overview and history of wool. I mean, I definitely wouldn't think about, wearing wool when I'm working out. That's for sure. But it's been pretty cool to see how Allbirds has incorporated and made wool kind of their mainstay in their product. So, with that said, you can imagine Allbirds was, co-founded by a founder that's from New Zealand, right? So Allbirds started in 2016 by Tim Brown and Joey Willinger. Tim was born in New Zealand. It's a country that, the main sport is rugby, but soccer is also huge. And so, Tim basically had this incredible career playing soccer in New Zealand and through the world. So he's part of the New Zealand national team for more than 8 years, being vice captain at the 2010 FIFA World Cup. And he played for the Newcastle Jets and Wellington Phoenix before founding Allbirds. And so though he was always good, he never thought that soccer would be like his quote unquote full-time job. And, though he had an excellent salary as a professional soccer player and his work schedule was, relatively limited during the week, he had room to explore hobbies and passions and, something that he would be more, kind of interested in. And so he ended up getting his bachelor's in science and design from the University of Cincinnati. He got a scholarship to go there based on his soccer skills. And then he got his MBA from the Kellogg School of Management at Northwestern University and an international management degree at the London School of Economics. So after the World Cup, Tim knew he needed to stop focusing on soccer and that, he wanted to figure out what the rest of his life would look like, which is pretty amazing if you think about it, to go from like a professional athlete that plays, up until their late 20s, early 30s, and then has this whole career after that. I mean, it is just amazing to kind of take a step back and understand like, wow, he's already done so much professionally as a soccer player. And now he's going on to do something, and wants to do something in a completely different industry after playing soccer professionally. Right. So I think it's just kind of shows who, Tim is in some sense, because I think a lot of athletes just kind of stay in their zone in their sport. And he, branched out like pretty quickly after playing professional soccer. And we'll get into his journey in terms of, him being co-CEO of Allbirds and what he does now as a partner at Ice House Ventures. And another kind of fun tidbit, but they actually bought in August 2024 the Auckland FC, which is a soccer team down in Auckland. And so his co-founder, Joseph Willinger, studied industrial engineering and operations research at University of California, Berkeley. And Joey went to Berkeley because at the time he knew two things. He wanted to be an engineer and he wanted to play soccer. So that was a university where he could kind of combine his two passions and interests. But he would get really, he would get injured really early in his soccer career. And so, he would just focus mostly on engineering. He then went to get his MBA at the Wharton School and became an analyst at Goldman Sachs, and then 3 years as a consultant at Deloitte, which I think, as a consultant, he says it enabled him to learn a lot about different businesses and different industries, which, I think is pretty cool. You get exposure to quite a bit. And then after that, he was an associate at Industry Ventures for a year, and then spent 6 years as the vice president of industrial products at Solzyme. And this company is actually a really innovative company in the sustainability space that is looking to produce oils and fuels from algae, which is pretty neat. I mean, I haven't heard about that before, but it's definitely neat.
I've actually got a story about that. So I remember when I was in college, there was a company, I think it was in Marysville, Ohio, called Algae Venture. And what they were doing, they were trying to be the next Exxon Mobil. And it was all about, getting algae and trying to separate it and turn it into biofuels. And so there's a lot of really interesting stuff that's happening in that space. And so I did go down a little bit of a rabbit hole on this one and just, I don't know the connection between shoes necessarily, but it was pretty cool.
Yeah. I mean, it's unfortunate because the company ended up going bankrupt and they got acquired for, their patents by another company. And, I think it kind of taught, Joseph or, Joey about failure and, how a lot of startups do end up failing. Right. And so, I mean, I'm curious, like, how important is it for a founder to learn how to fail, right? We cover so many different stories here on E-commerce on Tap. Like, for me, what comes to mind is Vuori, right? A lot of people don't know that founder, tried to start Vuori like 3 times before it actually became a success, which is, you've got to be a little crazy to do that, right? And so I mean, I'm curious, Aaron, from your perspective, like how important is it to learn how to fail as a founder?
Yeah, I think not just as a founder, but as a human, it's so important to fail. And I was talking with my wife with our three kids, and kind of what were some of the things we want to make sure that we taught them. I mean, I go back and she's taught them, how to read, how to cook, how to tie their shoes, and I'm like, great, I taught them how to wrestle. But I think that the key thing is that I want my kids to know how to fail, and I want them to know that like failure is okay. I think that having grown up and trying to be a high achiever in high school and college, that you can see the folks that have all this pressure on them of, what, I got an A-, my life is over, right? I don't have a 7.0 GPA, therefore my life is over. And so if you are always looking at something where, a perfect score is a passing grade, then you're never going to be as aggressive as you could be. And so you're always going to leave things on the table. You're always going to not stretch and do what you do. And so by nature, as a founder, you have to push the envelope. And that means that you're going to get it wrong, almost as often as every time you get it right. And I look at in the businesses that we've built, and, if I start over, I do things completely different in a couple of different areas. But like, I only know those things, and I'm only where we are because of the school of hard knocks that we've gone through. And so I think it is so important. And that's probably, as I think about angel investments or founders, I mean, like having somebody who is willing and able to deal with failure and learn from it, and not, blow up or have a huge issue with their self-worth if something doesn't go the way they need to. That is so important.
Yeah, I agree. I mean, I think everyone should learn how to fail, and I think failure leads to learnings and lessons, right? I think that's the right way to look at it. But it's interesting.
Were there any lessons from your life that really helped teach you how to fail?
I think I think of kind of whenever I think about starting something or failure, I think about like what's the worst that can happen, right? And I think when you ask yourself what's the worst that can happen, most of the time you realize, okay, it's not going to be that bad. If this doesn't work out, if you start a business and it fails, you can always go get a job, right? I mean, there's always going to be another avenue. And I think too, like most decisions in our life, I mean, there's definitely a handful that are not two-way doors, but most decisions in our life, are two-way doors. And by that, I mean, you can, make a decision, and, if it doesn't work out, you can go back, right? I think there's only a few decisions like having kids that, not two-way doors where, once you have kids, there's no going back with that. Right. So, I think about those kind of two angles when I think about failure. And I think a lot of entrepreneurs or founders to understand like, okay, I'm taking this huge risk, I'm starting this business. I always, tell my founder friends like, well, what's the worst that can happen? Right. And most of the time when you realize that, you realize it's not that bad. Right. So it's interesting because I think in the Allbirds story, though Joseph, learned from failure here, it was really kind of Tim that sparked the idea here for Allbirds, right? Because, while he was playing soccer, he was, basically playing around as a hobby, fabricating shoes. Like for whatever reason, that was pretty interesting to him. And, it comes back to, I think, his design background in Cincinnati. But, he began like sewing shoes himself and making these shoes manually, like all by himself, which is pretty insane to think about. I mean, I don't think I have any friends that like know how to make shoes, which is kind of wild. But this allowed him to try new designs and experiment. And it goes to show this like super unique hobby, kind of turned into what Allbirds is today, right?
Yeah, it's one of these things I was thinking of as we were preparing for this. It's like, people have odd hobbies, right? There are people that collect certain things or, are learning a random skill. And this is an interesting one where, for whatever reason, this professional soccer player decided that, they wanted to sew shoes in their garage and like start to make these things. But that's what he did, right? And, kudos to him for having the passion to go do that and for sticking with it. But his exploration of making these shoes really kind of at some point turned from a hobby over to an actual idea. And he started to invest a little bit of cash into small batch production overseas. I can imagine what that was like, not having a tech pack, not really understanding, how to make shoes at scale. But once he was able to come up with his design that he was comfortable with, he did an initial run of about 1,500 shoes. And he started to sell them for friends and family. He did them at full price, and he got pretty good feedback about them. And these shoes weren't wool at this point. They were actually made out of canvas. And he knew that they were good, but from a product perspective, they needed to be something else other than, than what they were in order to be really good.
Yeah, I mean, I think it's interesting too, because they basically make the transition to wool because everyone in New Zealand, where, Tim is from, was aware that, wool had a huge impact on the country. It was, at once the main economical engine of the country, and, it's relatively cheap synthetic, materials that had been replacing wool. And so the New Zealand government had a great interest in finding ways to put wools into, good use. And so, Tim basically saw these grants that the New Zealand government was awarding different businesses. And Tim basically found a way to treat wool so that it could be used on shoes instead of canvas or, these cheaper synthetic materials. And so, he had the experience of true quality wool coming from a merino sheep, and thought that it was worth to explore ways of how do you apply this to shoes, right? And so he realized this not only added comfort to the shoe, but also was a key sustainability point and, really kind of that key New Zealand touch, right? I mean, I think it's interesting because when I think of Allbirds and their customers, I don't even think most people know like the roots that it's from New Zealand and the, wool process that they go through to produce these shoes. So, it's an interesting point there because this is really how Allbirds started, right? If it hadn't been for these unique wool shoes and how he was able to, process this material, Allbirds probably wouldn't be what it is today. And so, it's worth noting that Tim's involvement with New Zealand is very high, having, been a part and a leader on their national soccer team. And so I think he had some connections to utilize, within the government and understand like, okay, hey, I want to start creating really innovative shoes with this wool product. And I would imagine most people thought he was kind of crazy, but, then he goes on to launch these shoes through a Kickstarter campaign in 2014. And so the campaign, if you look it up, it was really well produced from a content perspective. And, Tim definitely leveraged the fact that he was, a figure in New Zealand, and they got a ton of coverage in local media. And the initial pitch was basically, we're going to have a comfortable shoe that you can wear everywhere. And I think that's what resonated with a lot of people. And, what stuck out to me with this story is it's kind of similar in terms of how Vuori got started, right? And, like Vuori had this kind of everyday comfort type of product, and they still do today. I mean, I love, Vuori clothing. And I mean, I'm curious, like, do you think that pitching everyday comfort is a winning strategy, or was it just unique for that time?
I think it depends what you're trying to do. And they were trying to very much be mass market. I mean, think about how you could have marketed Allbirds in the beginning. You could have said, this is the most sustainable shoe ever. This is the most, Kiwi, right? New Zealand-ish shoe. They could have leaned into the origin of it. They could have leaned into the fact that it was made from wool, and that, like, it's the finest technology. There were all these different points that they could have talked about that were true. But the thing that they leaned into that led to all their success was that it was comfortable. And I think that when you have a broad claim that you can support, it is so much easier for you to get a mass market. Because, let's face it, the people who are very interested in leading edge wool manufacturing with a sustainable product from New Zealand, that's probably a very small market. But if you're trying to break into a difficult category, maybe that's the small market you need to go after first. You think about On Running, which is another episode we did last season. Their story was very similar in the fact that they had something that was very weird, right? They had these clouds that were on the shoe, and it was built for running. That was their niche that they focused on. But every time I see a pair of On Running shoes today, they're like 65, 70-year-old people that are walking around with them because they're so comfortable. And so there's just pieces here that are very interesting where, you kind of have to have a brand. You have to be known for something. But at the end of the day, you're kind of like, yeah, you can do all these things, but really, these shoes are great to just walk around in.
Yeah, yeah, and I mean, so the campaign was highly successful from a backer perspective on Kickstarter, but so much so that it ended up, generating losses for Tim. And it's interesting because we deal with this a lot at Sourcify, where someone launches a crowdfunding campaign, they knock it out of the park, and then they have a ton of manufacturing issues. I mean, that is a huge pain point with crowdfunding campaigns, and we see it all the time. And so in Tim's case, there were multiple factory issues. Basically, shipping wrong size products to customers, creating this really bad experience, but also the factory had other issues with other customers. And long story short, it ended up going bankrupt, which is just kind of crazy. I mean, imagine your first factory goes bankrupt. And so there was just a ton of costs that he hadn't properly accounted for. And he was unable to fulfill all the initial purchases that he had generated through this campaign. And so, I think it's just interesting because Tim, faces all these challenges with his initial launch, and he keeps going, right? And so, the way that Tim and Joey connect was that their wives were longtime friends, and so when Joey's wife found out of Tim's struggles with him fulfilling on this product, she thought, hey, I think Joey can help. So that's how they got in touch. And Joey would bring his focus and interest in sustainability into the mix. And a lot of these materials that are used in footwear are from plastics, from petroleum, which is, as he says, just stupid. And so with the help of Joey, Tim found fresh new capital to fund, this shoe brand, right? And there became a clear path from a product to a value proposition perspective. And, they would launch, the Wool Runner as their, initial product. And this product was called by Time Magazine, the world's most comfortable shoe. And I remember buying a Wool Runner and I was like, wow, this is an incredible shoe. I mean, it really, really was. And it's just kind of crazy looking back and understanding how this all started, from Tim's initial factory going bankrupt to then connecting with Joey, who has a lot more kind of business experience here, to being able to raise some capital to really, professionalize a lot of their operations, and then them creating the Wool Runner, which was their first shoe. I mean, to think about their first shoe being the most comfortable shoe is pretty wild, right, Aaron? I mean, that's insane.
I had a pair too, and like the fact that you could throw them in the wash and that they come out just as good. I mean, I had a pair of Allbirds for probably like 5 or 6 years. I wore them everywhere. Like I had to get rid of them because the sole, wore out, and I could start to see my sock. But they were fantastic. I haven't bought a pair since, but like they were a really good shoe when I had it. And I think that the interesting thing is Tim was thinking about shutting this down, right? Because of all these problems that they had. And so it just goes to show you how you can have a great idea, you can have a great product. If you can't execute, you're kind of underwater there. And, I think once they started to catch fire, their investor base was really, kind of saying, hey, this is great. Just grow as much as you can, right? We don't care about profitability. That'll be a problem for later on. And obviously that was a very common framework for physical product companies getting investment from tech investors, but it's caused a bunch of issues since then. And I guess it's the question I have for you is when do you think that a growth at all cost mentality is a viable strategy versus a lazy shortcut from actually building a real business?
Yeah, I mean, I think it ebbs and flows with the market, right? I mean, during the ZIRP era, of course, everyone was trying to grow at all costs because interest rates were so low. I think in general, if you think about, how do you build a sustainable brand? You look at the growth of Lululemon, they've basically compounded for like 30%, 20-30% year over year for decades on end, right? Same with Starbucks, right? And so I think if you think about these really sustainable long-term brands, very rarely do they just like start growing like crazy during one, certain period of their timeline. It's just constant sustainable growth. And, I think that's kind of the double-edged sword of taking on venture. These funds have timelines, right? Most funds are under 10 years and they need to see, $1 billion outcome in 10 years, which is, not only extremely hard to do, it's extremely hard to do in a sustainable way, right?
Yeah, I completely agree with you. And I think that taking venture money is kind of like taking a sleeping pill or melatonin gummy, right? It's okay once in a while if you've got a long flight or you're trying to get over jet lag. But if you take it all the time, every day to fall asleep, eventually you're going to become dependent on it, and you're not going to be able to function without it. And I think that a growth at all costs mentality works for very defined periods of time. And it's something where you've got to know the money that you've got and say, okay, here's the milestones that we're going to get to. And we are willing to basically borrow from the future, right? Because you're selling a part of your company, you're funding debt, because there's either a land grab going on. And so once we just land and expand, then we'll be able to own it. But there always has to be this option to flip into profitability immediately. You look at, Amazon is a great example. They lost tons of money for like the first 15, 20 years. But you look at this and what were they spending it on? Were they spending it on foosball machines and big parties? No, they were like building physical assets in their distribution network that, worst case, they could liquidate the company and they could sell the drones, the warehouses, the factories, things like that. And so I think it's a really big thing. And companies that I'll talk with, and even with our own companies, it's always this question of, okay, if we're going to outlay cash today, if we're going to outlay more cash than we have to, we're going to take on some debt, then we need to be able to buy something that is generating a return that's higher than what we're giving up, right? And so if it's equity, if I think the company's going to grow at 20, 30% year over year, I need to be buying something that, that is going to be growing at 50% a year or 100% a year. And if I'm not doing it, then it's a bad capital allocation.
Totally. Yeah, I mean, it's pretty, fascinating too, because they were venture fueled, and in the late 2010s, they became a fad amongst tech workers across America. I mean, even worn by individuals like Barack Obama, Sarah Jessica Parker, and Leonardo DiCaprio. So pretty cool because, their shoes really focus on comfort and sustainability. In 2016, they got certified as a B Corporation, which basically means, hey, this is a certification and a type of company, not, a C Corp. It's now a B Corp, to show their commitment to sustainability and the environment. And, today some analysts blame that as part of Allbirds' kind of downturn in the public markets that we'll get into shortly. But I mean, it's interesting because I think there's some question where, like, is commitment to sustainability align with running a lasting business and being a B Corp? I think a lot of analysts are asking them this because they just aren't performing in the public markets.
Yeah, that's a really interesting question. I was talking with somebody from AB InBev a few months ago, and they were talking about how their sustainability agenda is all about making sure there's clean water and making sure that there's fertile farmland and things like that, because those are the things that are going to be the most important to them being able to produce beer and to grow those, the materials, things like that. And so I think that, the challenge with Allbirds is they came to market and they became known as the world's most comfortable shoe. And that's really what people understood, and that's what they're buying for. At the same time, they had this large sustainability angle where they were trying to say, and we're sustainable, but they were attracting people that necessarily weren't buying the sustainable shoe. They were buying the comfortable shoe. And so I love the idea of a B Corp, and I don't think that that's the reason why things downturned. But I do think that, there was an element here where they probably weren't listening to where their customers were and what they were really interested in. And they were trying to put on a view of like, rather than who their customers are, they wanted to figure out who they wanted their customers to be. And at some point that kind of diverged and became difficult. But I think that sustainability is super important. You've got to think about business continuity. You've got to think about how you're going to make the world a better place by existing. But every company is going to do that in a slightly different way.
Yeah, for sure. I mean, and so on November 3rd, 2021, just 5 years after Allbirds was started, they go public, and there was a ton of hype around their IPO. It was considered a huge success for a sustainable driven brand. And yeah, I mean, it really popped. And, according to analysts, as they say, it was a perfect time for e-commerce companies to go public. Interest rates were low. Pandemic was still relevant. So a lot of people were shopping online, and their, early investors wanted to and needed to cash out. But in 2021, costs for e-commerce were also rising quickly. And, the company basically almost immediately after they go public had kind of a pretty drastic shift on consumer trends, like overall, I think a lot of consumers lost some interest in Allbirds, and there was a lot of complaints that started on the quality of the product. And they also launched a line of clothing, but there was a lot of quality issues with that. And so, they decided to quickly expand into brick and mortar, as we left the pandemic. And it was proven, or it became, hard for them to attract customers to their products. And so in 2022, they just started to do wholesale, despite the fact that they had promised to avoid wholesale 2 years earlier. And so, soon after, they decided to relaunch the Wool Runner, as they allegedly solved some of the quality issues from the past. And, they found, or they kind of got hit with manufacturing issues again, right, from a factory that they had sourced in Vietnam. And so it's kind of crazy because they just keep getting, kind of plagued by these manufacturing issues here that sets them back. And so this caused them to struggle in the background. I mean, if you look at kind of their expenses and P&L in 2022, like you can definitely see there were some manufacturing issues that were going on in the business. But in March of 2023, with sales shrinking, they brought in a consulting firm to find ways to improve their business, right? I mean, they kind of were going through this turmoil. I can imagine their executive team being like, what's going on here? I don't know if I would necessarily go and then hire a consulting firm to try to, solve our problems. But, that's what they did. And I think it's interesting because the fact that their consumer sentiment shifted from before they were public, like it was pretty drastic to see Allbirds as a private company versus them being a public company. I mean, it seems like, they were kind of caught flat-footed in this dynamic of, pre-IPO versus post-IPO. Customer sentiment definitely changed there.
Yeah, and I think the thing that was most interesting too is they lost track of who their consumer was. And so when they brought this consulting firm in, they actually went through and just started asking some very basic questions. And they realized that their consumer base had shifted from the tech bro persona, right, the VC, to now the soccer mom one, right? This whole comfort thing was really important. And so the thought here is like they totally missed there was a demographic shift, there was a use case shift, and that's a big reason why they were struggling, is because they were sharing a message that might have been popular in 2019 that wasn't as relevant in 2022 and 2023.
Yeah. And so, I mean, their executive team saw a huge shift with that, right? So in May 2023, Tim Brown stepped down as CEO and turned into their chief innovation officer, which was kind of to appease their investors. But by March 2024, both co-founders left the company and were replaced by Joe Vernachio. And basically what he says, it took half a century for Nike to become Nike. And so, we're still pretty early on their journey, right? In terms of, if you were to compare Allbirds to Nike on this timeline, okay, they are, very early on that timeline. But I think there was also this kind of conflict of interest between their capital partners and building a company that was really built to last, right? And so, certain analysts have pointed out that, probably would have been smarter to grow slower with less VC capital. But, that's what they did. They were riding this crazy growth curve and went public within 5 years, which was just pretty incredible for their stack. And so, I mean, more changes are expected this year. I mean, Aaron, do you have any kind of insights or tidbits that you've uncovered in the news?
Yeah, I mean, just some reports about employees talking about how they feel the company is currently lacking a real purpose or direction. And they're trying to deal with this morale issue. The stock price is non-existent, and they're trying to figure out how to be profitable and how to grow their sales. And it's just a really challenging time for them. And I think that the key thing here is that Allbirds is having a bit of an identity crisis. They launched with this comfort motif, and that did really well. They thought that the concern was the VC crowd. Apparently they thought that there were hundreds of millions of VCs out there. They're not. And so there's just a piece here of like, what is Allbirds? What is it meant to be? And I think it's a big piece there. And, there's just this broader conversation that is happening around the expectation that retail startups have. And, should they be as profitable as startups, or should startups be as profitable as retail companies? And the reality is, it's just like physical products are different, right? You can't grow at a pace that a tech company can. with the same margin, because there's effectively very little marginal cost to scale a software business as there is, building out the distribution, building out the factory networks and things like that. And so I think that, Allbirds had positioned itself as very much a trend. It was very something that, we both bought a pair of Allbirds, but I bought one pair. I don't know how many you bought, but it's something that we didn't feel the need to go in and replace it. It's like, oh yeah, that's fine, but what else is out there? And so when you try to position yourself as kind of a fashion brand at a mass market appeal, like it becomes very difficult to sustain that. And so they had this big pop, all this enthusiasm, and then didn't really pan out. At least it hasn't panned out so far. So I don't know. It's a really interesting piece here where we'll get to it in a little while about what I would do differently with Allbirds going forward. But why don't you just walk us through the financial milestones so we can get oriented on that?
Yeah, I mean, it's pretty incredible, right? I mean, so 2015, they raised a seed round led by Peterson Ventures. 16, they do a seed round for 2.7 led by Lear Hippo. Series A then with that same year with 8 investors for 7.3 million led by Mavron. In 2017, they raised a Series B for 17.5 million led by Tiger Global. 2018, Series C for 50 million led by T. Rowe Price. 2019, their revenue is $193 million and they lose 14.5 million that year. 2020, they do a Series D for 25 million led by Bailey Gifford and Fidelity, and then a Series E for 100 million led by Franklin Templeton. And so, at this time, the company was valued at $1.7 billion and their revenue was 219 million and they lost 25.8 million this year. And so just keep in mind that like these numbers are actuals because they are publicly traded. Their financials are disclosed. And so 2021, this is when the company goes public. They had an asking price per share of $15, but they popped that day. I mean, they rose to $28 per share, and their revenue that year was 277 million, and they lost 45 million in 2021, which is kind of crazy to think about. I mean, you do over $250 million in revenue and lose almost 50 mil. 2022, they grow a bit. They do 297 mil and they lose 101 million. 2023, the revenue declines a bit. They do 254 million and they lose $152 million. So then in 2024, just earlier this year, both co-founders have stepped down, and Joe Vernaccio steps in as CEO. And then in April of this year, NASDAQ has given Allbirds a warning to raise their stock price or risk getting booted from the index altogether. And so companies get this, letter when they are performing under $1 per share for 30 days straight. That's just not compliant with NASDAQ. And so, I mean, it's kind of crazy because, their stock pops the first day of trading. They're on this wild rise. As a public company, you can see like the revenue was compounding slowly, which, probably set investors away. And now it's been on the decline and they have huge losses. And so, I mean, that's why their stock basically went from a high of like over, $480 to now, less than $1. It's kind of crazy. I mean, hearing this crazy journey from a financial perspective, I mean, what lessons do you think we can pull from that?
Well, anytime you go from a valuation of over $4 billion to just a couple $100 million in a span of 24 months, it's a cautionary tale. There's no way to slice it up. I think the most important thing to look at first is one, you've got to be profitable. Right? There is a profitable business. There's a future for Allbirds there, but it's going to be different than the future that they thought they imagined for themselves. And whether that means that they are going to be a mass market player, whether that means that they're going to be more niche, they're going to be more high end, whether that means they're going to change the branding, the focus to be less sustainability focused and more comfort, or more luxury. I mean, there's so many things that like this brand is too good, it's too well known, there's too much equity there that it will survive and it will live. Who knows if it goes through bankruptcy and they have to kind of clean the cap table? Who knows if there's another company that's going to buy it and kind of retool it? But certainly there are a lot of great things that happen, but they never got off of the VC addiction, right? And when they went public, they were still running their business as if they were going to raise another 100 million Series F, when the reality is that there was a time and place to do that, and they should have changed and transitioned to become a stable, profitable company before they went public, right? And so I think that the markets, it was the right time to do it from an investor perspective. So if you're trying to optimize shareholder value, then they did the right thing at the right time. Had they gone public 18 months later, when the stock market had been much lower, it wouldn't have been worth $4 billion. It might have been worth $1 billion. Like the cost would have come down. And so it's a tough thing, because when you have a large cohort of investors that need to cash out and they're going to maximize their investment, and to some extent don't really care what happens to the company afterward, you're going to see stuff like this, right? And you're going to sell a sizzle, you're going to pump it up, and you're going to just try to time the market even if you're not ready, because it's the best benefit for you as a shareholder eventually versus the company at large.
Yeah, 100%. I think you hit the nail on the head. What about, their supply chain? I mean, we talked about their factory challenges, consistently occurring. I mean, what stuck out to you from, their supply chain?
Yeah, should have called Sourcify is what came out as we went through this. I mean, the amount of shoes and other things like that Sourcify does is pretty amazing. So I don't know to what extent the factory issues they were having were from their unique wool process, or if it was the other assembly, but they've always been plagued with factory issues. And this is part of the challenge of having a new technology, a new process. You really don't have that many options to pick up and go. And so their factories had an enormous amount of mistakes. The factories didn't always admit the mistakes, and they refused to fix those. It's like you said, their first factory went bankrupt. And so they almost lost all the exclusive textiles that they had produced elsewhere and shipped in there, because when the factory goes bankrupt, they're not like, okay, here's your stuff, here's that stuff. They just kind of close their doors and people bid on those assets. And so, you would have thought that this would have been solved and fixed, but it happened again in 2023. And, it might be something where, again, if Allbirds wants to be the world's most comfortable shoe, does that mean that they also have to be wool? Right? Could they still include some wool in the sole, or other parts of the shoe, and keep that ethos, or does it have to be that part? And so there's some really challenging things that they have there, just from a product quality point of view. I think the other thing that's really interesting to talk about with Allbirds is their commitment to sustainability. They have some amazingly ambitious goals to embed sustainability deeper into their supply chain than what some of the other companies that we come across in. And this is something where, there's always this decision of foregoing profits today or revenue today in service of some other motive. And I think the problem that Allbirds has is that the company and the leadership wants to really be a pioneer in the sustainability space. And they are okay making those trade-offs and saying, hey, we're willing to take less of a margin, or we're willing to deal with some quality issues because this is just a better way to produce this. So the challenge that they had is that when you're a private company, you can afford to live your values a little bit more, right? Because your ownership, the people who are making that trade-off between profits and revenue, are the same ones that are working in the business. And so I think a great example, the tip that I shared a couple of weeks ago about Lego, privately owned company, decided they're going to take a 70% increase in their cost in plastics in order to have a bio-based brick that they produce. That's something that probably could only happen as a private company and wouldn't have happened if they were public. And so there's this big thing that happens when you go public where, if you're profitable, people will be like, okay, that's fine, do what you want. But when you're not profitable and you get a new set of masters in there, a new set of shareholders, then you have to change and appease what's there. And so I think the challenge that happened here was that up until this new CEO that came in earlier this year, you were still running the same playbook of, we're always going to get more money from the markets. We're always going to be able to do these sorts of things. We're a young company. We're scrappy. We're going to figure it out. But they didn't really put it all together, and they didn't transition culturally or operationally into being prepared to be a public company, and they just went public instead.
Yeah, I mean, it's pretty crazy to see how sustainability has, I guess I don't want to say messed up their supply chain, but caused a lot of challenges in their supply chain, right? And they continue to have these factory issues. And, one of the things that their new CEO put into place is that like up until that point at the end of 2023, Allbirds managed its demand and inventory planning with company-made spreadsheets, which, he says stifled quick collaboration and created more risk among many moving parts of the business, which, I agree with. I mean, we have our own source of software that, our clients use at Sourcify to, manage their production and RFQ process. And I think it adds more collaboration and enables people to move faster. And so, I think in general, you've got to be dynamic and move fast in a supply chain. And that seems like that was a challenge for Allbirds' team. From a shipping standpoint, they offer 4 shipping speeds within America. Standard shipping options cost between $5 for 6 to 8 business days to arrive. And they have other, expedited shipping options like, 2-day at $16 and 1 day at $25. So it's just interesting to see kind of how their backend operates. I mean, I can't remember when I bought my wool runners, how long it took them to come, but I think it was pretty quick. I think it was like, a few days.
Well, honestly, I mean, it's like 2 shipping options is really all you need. I bet if you looked at the data here, you probably would see that most people are choosing the 2. And to some extent, there's too much. I think that 4 is too many personally. And, you can do ground shipping if you've got a regional fulfillment network. It's a 2-3 day transit at most. Anyways, that's good for most people.
Yeah. And then if you look at their import records, they primarily import their footwear from Asia. So Vietnam is a leader, South Korea and Hong Kong as well are ranking on their kind of top 3 countries of origin. And they have records of importing apparel from Guatemala, Laos, and Singapore. But Vietnam is definitely kind of the leader of exports to Allbirds in the shoe department. And it seems like they've imported shoemaking and shoe repair machinery from South Korea, which is kind of interesting as well. But it's kind of neat because, well, I don't know if neat's the right word, but, they have this New Zealand ethos of wool. But, if you actually look at their supply chain, it's all coming from Asia. And I don't even think, I'm not sure, but it doesn't seem like they're really, maybe some of their wool is coming from New Zealand. I don't know. I didn't see the records necessarily. So I can't, state if that's fact or not, but just interesting to see how they have this New Zealand ethos, but it's all in Asia.
I think that kind of gets into what do they want to be when they grow up, right? Like, I don't necessarily think that they're leaning into, it's New Zealand style, right? The same way that you would do with Italian shoes, for example. And so, I don't know, it could be something that they started, and I'm sure they're importing or exporting the fabric everywhere that they're producing stuff, but I don't know. It's an interesting thought there that there's a lot of decisions for Allbirds in the next 5 years.
For sure. But one thing I did see online is customers definitely praise their return service. They say the returns was excellent and customer service was super helpful. And the company initially had a vertically integrated distribution model, but has since, expanded to work with other partners. And it's interesting. So the company's, still public. I'm curious, Aaron, what do you think kind of are the kind of potential outcomes at this point for Allbirds right now?
Yeah, if I were advising them, I think that structurally the first thing they need to do is they need to go private again. I think that they need to get some of the focus off of them. They need to fix a lot of things that they're working on. And so I think given where the stock price is right now, I would be surprised if there are not conversations that are happening with a private equity firm, with another brand or something like that, that's going to just take it private, take it off the market, and maybe try to do this thing again. I think that the key thing that Allbirds is going to have to figure out is, who are they, right? What do they want to be when they grow up? And that doesn't mean that they get rid of everything they've done, particularly around sustainability. But I think that they need to lean into this most comfortable shoe sort of ethos. And I would probably look to shrink the company to profitability as quickly as possible. And again, I think, if you're doing $300 million in revenue and you're losing 100, maybe just do $150 million and make 20. Like, that seems like it could be reasonable. But at least you have a basis where you can continue what you're doing and you can go forward. And so those would be the first 2 things: is I would take it private, I'd make it profitable as quick as I can by shrinking the business. And then I think that from a branding point of view, you've got to figure out the right way to lean into this. And so they need to know their customer a little bit better. Again, you look at the tech pros and the runners and things like that. The thing that stuck out to me is, this is a little bit late now, but given the founders' focus on soccer, why isn't there, like, why isn't Allbirds known as a soccer brand, right? It's more of a walking to the grocery store brand. And so there's just some interesting things that, that moment may have passed in order to kind of go do that. But I really think that they need to kind of double down and figure out not only where they are today, but where do they think they realistically could go? Because you look at like a company like Burberry that's been around for over 100 years, they were really in the doldrums for a while and then kind of breathed some new life into this and have grown to be a massive, very profitable company. And so, is the future of Allbirds one where it's mass market, or is it going to be more luxury? Like, people pay for comfort. And so maybe then rather than being a $70 shoe, it needs to be a $300 shoe. And could you make it so that the quality is such and the story is such that it becomes a bit of a status symbol? Because even ugly shoes like Crocs, do really, really well. So I don't know. There's no reason why this brand shouldn't be successful in the future, but they got to rip it down to the studs and start over.
Totally. I think that's a great take. And I agree. I mean, I'm sure there's a lot of companies looking at taking this private. I think that makes the most sense. I think, what's interesting too is like in our community of the D2C world, on Twitter and these different forums and stuff, I think most people think Allbirds is kind of dead. But then you look at their numbers and it's like, well, okay, they're dead, but they're doing $250 million a year in revenue, which is phenomenal. It's amazing. And so I think, like you said, they just need to strip out a lot of their costs. They need to optimize the business and find their focus. But I love the story. I mean, I still remember getting my Wool Runners. I'm now tempted to, get some Wool Runners. Maybe the next episode, you'll see some Wool Runners right there in my background. We will see. But, we greatly appreciate everyone tuning in to this episode of E-Commerce on Tap, brought to you by Sourcefy and ISBA. It's crazy because, when Aaron and I started doing these deep dives, we thought it was just us two listening. And now we've seen, the listener count grow pretty tremendously over the past few months. So we really appreciate, you sharing, you subscribing, you following the show, and, leaving a review. We're always excited to see reviews. And, we post these on LinkedIn and Twitter every week. So leave a comment and we'll get back to you. And thank you again for listening to this episode of E-Commerce on Tap, brought to you by Sourcefy and ISBA.